Your biggest financial mistake isn't obvious, it's something you do every single month. Because most people pay everyone else first, and save whatever's left, which is usually nothing.
All right, today we are diving deep into a really powerful and honestly, often unseen force in the markets. We're talking about the liquidity sweep. We're going to break down exactly how the big players operate, and more importantly, how you can start to see the market through their eyes.
I mean, how many times has this happened to you? I bought the stock, it went down. I sold it, and it went up. It is one of the most frustrating feelings for any trader, right? You think you've made the perfect call, you put your money down, and then bam. The market seems to move with the sole purpose of taking you out. It's a feeling of regret that, let's be honest, we've all been there.
So what gives? Is it just terrible luck? Are you cursed? Or is there something a little more calculated going on behind the scenes? Well, in this explainer, we are going to pull back that curtain, and I promise you, the answer might just change the way you look at a price chart. Forever.
Okay, so to really get what's happening here, you first have to understand the two main players in this game. Think of it like a classic David versus Goliath story, but, played out on your trading screen.
So, on one side, you've got us, the retail traders. Our goal? Maybe buy 100 shares of something. And our biggest challenge? Usually is just managing our own emotions, right? That constant battle with fear and greed. But on the other side, you have the institutional investors, the quote-unquote smart money. Their goal isn't to buy 100 shares, it's to buy 1,000,000 shares. And their challenge? It's a whole different ballgame. It's not about emotion, it's almost a problem of physics. I mean, seriously, how do you buy 1,000,000 of something when there just aren't enough people selling it?
And that simple question right there, that brings us to their core motive. See, these institutions are on a constant, relentless hunt for one critical resource. And here's the kicker. It's a resource that our orders provide. And that resource is liquidity. Just think of it like the fuel for the market's engine. For you or me to buy 100 shares, it's pretty simple. We just need to find one person, somewhere out there, who's willing to sell 100 shares. Easy enough. But for an institution to buy 1,000,000 shares, whoa, they need a massive, massive pool of sellers. Because if they don't have that, their own buying pressure would just shoot the price to the moon before they could even get their full order in.
If this helped, the full video goes way deeper. Check my channel.